Good morning and welcome back to the Orlando Real Estate Buzz. We come to you every Thursday morning with both national and local news. Joined as always by Joseph Dion of Apley Home Loans. How you doing this morning, Joe?
Doing good. It's a beautiful Thursday morning, right?
It's gorgeous out. And the news just keeps rolling in 2024. We got some great stuff this morning. I think first and foremost, commercial, New York Community Bank. That was an interesting day yesterday, huh, Joe?
Yeah, a lot of interesting pieces and nuggets on that one yesterday. Definitely interesting to see, especially because it's a public company, to see kind of some of these workings of what's happening with it.
Yep. Then you got Jerome Powell speaking yesterday. You got all the economists saying, please cut rates. And Jerome's going slow and steady. He's the turtle. He's the turtle. And then, of course, we got job numbers that came out yesterday. We had both the ADP as well as the JOLTS come out, and some interesting data when you break down the numbers there. So, but let's start with kind of what happened to New York Community Bank yesterday. It was a very interesting day.
Yeah, well, like NYCB, right? Well, there you go, right? Headline right there, 7% of deposits in 1 month, right? I think they went from 83 million down to 77 or 83 billion in deposits to 77 billion.
Yes. Yep.
And the big thing is that data was through March 5th. It didn't take into account anything that happened yesterday, which was an interesting move because this stock has been, you're talking the stock was well up at like I think 12, 13. Then it goes down to 7 when they had some accounting errors that kind of got rid of their chief risk officer. They appointed a new CEO back in, this was February.
Wait, a bank needs a risk
they
officer?
appointed a new CEO. What?
A bank needs a risk officer?
Chief risk officer. Yep.
I thought those were optional.
Well, apparently he wasn't doing a good job. I don't know the details too much, but he left. And then they found that there were some material defects in their bookkeeping, and they took a $2.4 billion good faith write-off, so to speak, which created some uncertainty in what was going on. But it seemed like the stock had stabilized. They had really dropped down into the threes, but then they appointed a new CEO last week, and he says, if we fall below 3, we might have to raise some capital.
Yep.
On the stock price. Yep. And sure enough, yesterday, they fell below 3. If you look at that chart.
This is the little chart. Look at this.
It's crazy because there was a Wall Street Journal broke an article right about when that happened, was when the drop-off happened, was they broke an article that they were seeking to raise capital from multiple companies.
Yep.
Then the stock goes down, all the way down to like 170, 190,
176. Yeah, 176.
So, a massive drop in their stock price. My understanding is, they had some technology issues that took their banking industry offline. The stock halted for volatility, then halted for media, which like a major news release or a major announcement or PR announcement that was going to happen, that kind of kept the stock from being able to be traded for a little over an hour and a half. Yep. And then when it opened back up, like they announced, hey, we raised $1 billion.
And it opened at like $4.
And opened at $4. And the crazy part is they raised $1 billion on the investors are getting it at $2 a share. And it opened at $4. So like the stock is being diluted and it opens at $4.
And look who's the investors are.
It's the name.
Look at that name. Does it sound familiar?
Sounds pretty familiar to me.
Former head of was it Treasury?
Yep.
Right?
Yeah. I mean, he's got it, and he's got his private equity firm now, and they kind of came and they infused. I think it was multiple. I think 4 different agencies over. I think it was 1 billion, 50 million in total. But they have, they have common stock at 2. Their ability to buy preferred stock were converted to preferred stock. They've got ability to buy stock at 250 and then they've got warrants for 60% of their 1 billion. Are warrants that they can exercise, which none of that's being factored yet into the dilution of shares, right? Because they're not issued yet.
There were roughly about 700,000 shares, I believe, of
700 million.
Yep.
700 million.
they're getting 500,000 shares. So you basically have almost doubled the number of shares.
I have to do the math because they had a conference call. And I didn't get a chance to read the press release from this morning that just came out.
Mm-hmm.
They were saying only 59 million in new shares, not 500 million in new shares, which kind of blew my mind because I was like, the math doesn't math. If you invest over $1 billion and you're getting them at $2, how are you only getting 59 million in shares? So I was like, there's a lot more that's weaving into this. But what was really interesting is they've already changed, like with this infusion of cash, they wanted new CEO, new executive. Yep. They've got a new chief risk officer, a new chief audit officer. Like they put a lot of different pieces in place that all have been agreed on and put in place. But the deal's not finalized yet.
No, that's interesting. And the date that they want this finalized is interesting because it's March 11th. Mm-hmm. What happens on March 11th?
I believe there's some government program that expires.
The BTFP retires. So the possibility of going out and getting funding for saving a bank, which was used for Signature and the others, is gone.
Now, I do think like when we look at this was a really interesting one in my opinion, because they do have so much in, like they've got, I mean, you're talking 77 billion in deposits still.
Yeah. Like, yeah, I mean, deposits are still, that's a good amount of deposits. And then you look at where their breakup is, because you can't forget that they own Flagstar, which is one of the largest wholesale.
I think top 8 wholesale lender.
Yep. And then you've got all the New York rental properties that they own the loans on. Yeah. So you're sitting there going, okay, they see something, they see a big upside for something. Because you just don't, these names just don't come in and try and save a bank. They're looking at something. They may be looking at some of the assets and figuring out that, hey, if we take this over and we sell this asset and this asset, we're going to quadruple our money. And I think that's part of what it is they're looking at these assets, some of these assets. If I have to sell some of these, or I'm going to, they may have a plan already in place to sell some of these assets.
I looked at it and it was very interesting. And this is kind of fun stuff with it is they had a conference call today to talk about all of this stuff. And one of the questions somebody asked was like, what's your plan? And they're like, oh, well, we don't have, like, we're putting together our strategy, and I get like, hey, like they just put together this agreement. How are we going to have a new strategy moving forward? And they're like, we'll have that together and we'll share some info at our April conference. And it's like, I'm like, all right, well, we've got a full month that we've got details, so we don't know really what's happening. And I'm just saying, like, I don't know, like you in January, you had your dividends were 10 cents a share of a stock that was trading at $10+. February, they take that 10 cents a share dividend and drop it to 3 cents. And then with this news, they just dropped it to 1 cent. I'm like, bank plays are typically for those dividends, right? These are not stocks that go out the wall. Like these are because they've got
dividends. They're usually pretty steady.
And now I'm like, well, there's no dividends play here. Like we've diluted shares, we got rid of dividend. Like I joked, I was like, why even have the dividend? Like 1 cent.
Yeah, like 1 cent. Why bother?
You know? But it was interesting. They are safe. I think this is safe for now, maybe.
Yeah. Like it's interesting if that news is going to help stop the withdrawals. Yeah. To lose $7 billion in deposits in a month, that's a big hit.
Yeah, and I think that's the hard part is, it's 7%. It's 7, like it's a lot of withdrawals, but in the grand scheme, like that's not enough for, quote unquote bank run or anything like that. Most of these withdrawals are FDIC, like most of their deposits are FDIC insured. Like they don't have a lot of investors that are over that 250 limit. So I think that's part of it, right? Like, you're kind of safe in those. And I also think that a lot of people like everything's New York Community Bank, but then you've got Flagstar, which is kind of where a lot of their deposits and branches and this and that. Like this is like, I think there's a lot of confusion of what's what, right?
Yeah. Yep.
And I think I would not be shocked if they go and kind of nix the New York Community Bank in the next 6 months, and go to Flagstar
That's a
across
good
the
point.
board
Yeah.
because
Yeah.
of a rebrand.
Rebrand the whole thing.
Yeah.
Yeah.
So I
So
know that they just rebranded colors and everything for Flagstar
Yeah.
to New York Community Banks, but wouldn't be shocked if they just go Flagstar to get rid of the name.
Get rid of the name. Yeah. That actually makes that makes a lot of sense.
But I think they're safe for now. That's you don't need to withdraw don't listen. This is not financial advice by any means. So,
yeah, we are not financial advisors.
I think that the bank is going to be fine over the next 30 to 60 days.
Yeah. And the investment groups that are in on it, they each took about 25%. They've got additional funds available. If they have to infuse a little bit more, they can always infuse a little bit more. That's there. But it kind of brings us this whole banking crisis, which we've talked about tremendously, really kind of brings us into what's going on with Jerome Powell. And he spoke again yesterday, and it's so funny to see the reactions. What I took out of it is we may not get any rate cuts this year.
He's definitely like kicked the can down the road, right?
Yeah. So you got that, but then you've got other people like, oh, it's June. It's June. June, the rates are coming. June, the cuts are coming. And you go through and you look at all the different headlines, and people are just like, yes, it's going to cut. No, we're not going to cut. And you're like, okay, guys, which one is it? And I took it and I'm like, his comments on inflation is we're pushing towards it. The core inflation number has come down. It's come down a couple percentage. Yeah, but we took a spike last month. So how is that, really pushing down that 2%? And the one thing that I keep seeing that's keeping our inflation up is the rental market. And I saw a chart and I wasn't able to pull it off, but actual rents are like this, but the claims for what you're charging for rent is up. And there's a divergence between the two. And I'm looking at that going, it just doesn't make any sense. And then you've got everyone, the good old betting table, coming out of Vegas on where do we expect rates to go. Right now, I still don't get the 3% of people who think that they're going to cut, at the end of this month. I mean, he's made it very clear he's not
margin for error.
Yeah, it's gone. Margin for error.
If everything goes haywire, you know what? If a bank fails tomorrow, who knows?
Yep, exactly. And then you go into May, and you only got about 80% of the people right now in May, or you got to have 80% feel that we're not going to get the rate cut in May either. And I agree with that. I really feel we're not going to. But you got the 18% holding out faith. But then you come into June, and you've got about 60% right now, even after the comments yesterday, that calculated cuts. We are going to do calculated cuts. That was his comment. Well, calculating. He feels that the economy is strong enough. I think they revised the GDP down to 3.2% from, what was it, 3.9 yesterday, which of course nobody ever covers that one. But 3% is still solid growth overall. So you've got these people feeling June's going to be our first quarter point, but then look at this in July. You got 42% thinking that we're going to have an immediate quarter point cut after that. So by July, they're feeling we're going to have a 50 basis point cut on interest rates.
Yeah.
I see nothing out of Jerome's speeches, unless he changes, he's testifying again today, unless he changes something does a 180 today at his testimony, there's nothing there. There's nothing there to say, yes, we're, the economy's really taking a dump. Yeah, we've got the commercials still, tough, but somehow they're holding it all together. I mean, I don't know. We still have what, $1 trillion worth of commercial left this year that has to be refinanced. And I see a lot of pressure with that overall. But I don't see where these people are coming up with this 0.5%. And we look at our job numbers. Here's ADP from yesterday. We missed it by about 10,000, the ADP number. 140, but it's still, it's steady. It's not exuberant, but it is a steady overall number. Correct?
Yeah.
So you've got that, and then our jobless claims were unchanged.
Yep.
As well. Came in adjusted at 217,000. Last week was 215,000. So that's pretty much leveled off. And I found this interesting is that because we've got other numbers in the jolt that contradicts this to me. The labor market is steadily moving up. With 1.4 job openings per every unemployed person. So shouldn't people be getting jobs steadily? And if there's 1.45 jobs, wouldn't you think more people be willing to change jobs?
Yeah.
But but that's not what our numbers are telling us. Our job openings fell 26,000 to 8.86, correct? Hirings declined 100,000. So if there's all these job openings for all these unemployed people, wouldn't you be pushing wouldn't the hiring pick up a little bit?
I would imagine somewhere. Well, we don't have qualified job candidates.
Well, the arts degree,
Oh.
I'm sorry. I said the one part out loud. But here's interesting too, is the quits decreased 54,000. So that kind of tells me that people are nervous about the opportunities of the openings that are out there. Okay, maybe we do have 1.45, but is it the job at McDonald's?
Yeah.
Yeah. Where are these 1.45? Yeah, it's great if I got, a choice of 2 jobs, but I don't want to work either one of the jobs, or the jobs currently don't pay enough for me to live off of.
Yep.
So those are the questions that I start coming in, start going through in my head. It's like, why aren't they filling up? If we've got this many openings, why aren't they filling up? And I think you hit a great point. Is it more due to unqualified candidates than anything else?
Or maybe it's overqualified candidates, like you said. Like maybe because I have noticed, like when you look at the numbers, like hospitality, retail, like these lower wage jobs, like these are consistently where the most job openings and job creations are.
It seems like I got a client whose daughter, Amy Barisma, her daughter just graduated from University of South Florida. And she's having a heck of a time trying to find a job. And then their friend's son, who graduated top of his class, UCF, and he graduated, I believe, last year, he's having trouble finding a job. So I'm like, okay, here's 2 young people who really want to work, but they're having that difficulty finding a job. So there's something in the numbers that we can't see. But here's the one that kind of hit me is you're saying we've got this 1.45. But when we go back to the JOLTS report and we look at last January in 2023, there were 10.4 million job openings. We've dropped nearly 1.5 million job openings in a year.
Yeah.
The unemployment number hasn't changed. So have they just taken away the jobs? You know, I mean, we were going through some numbers about the layoffs
Mhm.
that you had. That what is it? This month, February had the highest.
In February for corporate large scale layoffs. So these are like reported, like these are larger companies that are laying off a significant number. I think it was 86, the Challenger job cuts report. What was it? 84,638 layoffs in February, which was more than the 82,307 in January, and was the largest February mass layoff or large scale layoff on this report since 2009, and the most since in the last 11 months.
Mm-hmm.
So these and the Challenger job cuts reports, these are corporate layoffs. I think it's companies that are corporations, more than 50 people, I believe is the specific
Okay.
what it is, because
Okay.
they have to report to the states. Like they have to report to
Yep.
the states that they're going to do this before they do this, right? But that's a big, like you think about it, 84 million, like 84,000, 82,000 the month before. So we're at, that's 80,000. That's over, that's sitting right at, 9.6 million for the year if we trend this way, but it's
Yeah.
going up.
Yeah.
So what's happening here? Like we're seeing more of this. We are seeing a lot of the weakening that Jerome Powell wants to see. I just think we're not seeing it at the rate that he wants to see it. Like I think
Yeah.
he doesn't want it to be like, I don't know about, like for him to want to cut the federal fund rate, he wants to see a little bit more bloodshed.
Yeah. Yep.
That can get a
And
little bit more gory.
yeah. Yeah. You look at these and you're not sure which the hardest part is. A lot of times we can kind of see where it's going, but
Mm-hmm.
right now it's kind of to me it's kind of a haze. It's
Yeah.
like it could break really hard one direction, or it could break the other direction.
Yeah.
And it's just which way is it going to go right now? And I don't think anyone's real sure with the analytics right now.
I'm okay if it stays put. Like if it stays put and federal fund rate doesn't dip, like he keeps it firm. Once if there's stability, you'll see like mortgage rates come back a little bit closer to
Mm-hmm.
that Fed fund rate. And we could in theory see rates, in that 5.75 range without a federal fund rate. But it has to have stability for that to happen.
Yep.
And that's
Yep.
going to take
Because
time.
the margin, I haven't looked recently, but the margin still seems to be rather
Exactly.
large.
Yep.
Over where traditionally it sits. So there is room in there. And maybe with the steadiness of the 10-year treasury that we've really seen a window in the 10-year treasury of somewhere about 4.15, 4.3, somewhere in that ballpark, for what, the past month or so.
I have an urgent call I have to take.
Okay.
I'm going to disappear.
Okay. I'm going to hop into the numbers. So let's break into the Orlando numbers for the week. We actually had some really good numbers overall, and our sales increased over 200 units for the week. Interesting enough, the median price actually didn't increase. It's staying steady. So even though we've sold over 200 plus more homes, the prices, we're not seeing the price increases that we have seen when the number of sales have gone up. And the inventory didn't move down. So there's been enough inventory to really replace what was sold for the final week of the month. And I know, speaking to Joe earlier, he I believe did 33 units, and 23 of them were the last week of the month. So a lot of people pushed their sales to the end of the month, and it really reflected in the final numbers. For the first time in several months, we actually saw an increase in the condos as well. We jumped to 165. But again, even with the increase in sales, we didn't see an increase in the overall median price. It's really held flat. And the same thing with the inventory. And then getting into what I look at really every single week is, oh, Joe's back. is the breakdown of the original sales price to final listing price. You back? You there?
What did I do here?
Oh, yeah, there you are. Your mic was off. So you won the lottery. Congratulations.
Yes. No, maybe not like that. No. No, I apologize about that, guys.
No,
A
quite
call
right.
that I was expecting much later had to, and it was one of those I had to verify information, and you know how that goes. If you don't
Oh,
answer
yeah.
it,
Yeah,
good luck
you're
getting
never
it
going to
done.
hear from them for 3 days. So, so we're just getting into the breakdown of original to final list price. And, we jumped over 200 units of, single family home sales for last week. But look at what happened to the original list to sales price percentage. We're sitting down at 93%. So a lot of people had to make some serious concessions in order to sell their home. And it was straight across the board. Under $250,000, there was nearly a 10% discount off the original list.
That one blows my mind. Like that I feel like is a price point that should be flying off the shelf.
That you wouldn't think because there's so few of them available. But I think maybe a lot of it's just the condition overall of the house.
Yeah, true. Like, I mean, under 250 is not going to be a pretty house anymore.
No, it's not. It's not. But you look straight across the board, and it's the same thing. But again though, look at our over $1 million homes. 86% decrease off your original list price. That's big. You're talking 140,000. You got a house listed at $1 million. You're taking 860,000 for that house. Yep. That's amazing. And look at their days on market now. They've jumped to 90 days on market for over $1 million. That's huge. That's buyer. That's total buyer market right there. When we look at our, this is the first we've seen this in a long time, a huge spike in our graph. But look at our median again. We're flatlining.
Yeah.
We've really kind of flatlined on it, which with rates where they are, I think we're going to see that overall for the year, unless we get a pretty good rate cut, that we're going to see this flat line because we're still maxed out for a lot of people on what they can afford. And then look at our inventory. That's flatlined. You want to talk about steady for the past couple of weeks. Really for almost 2 months, we've really held at that 5,500 units that's available. And this was something I wanted to take a look at because we've kind of watched this, and you see it usually at the end of the month. Look at here, 12/31, you see the spike. The end of the month in November, you see the spike. And the same thing again here, the end of February. The number of people withdrawing their units had spikes at the end of the month. So there's a lot of people who are looking at it and saying, okay, it's been on the market 60, 90 days. We're not getting any hits. We're not getting the price that we want. So we're going to pull this off the market. Yep. And we've seen that number steadily increase overall for a lot of people. Then our condos, oh my gosh, finally, we broke 150 units in condos for a week.
Yep.
That hasn't happened for several months.
That'll be back down.
Yeah, and then our inventory, again, it's kind of held steady overall, and our withdrawals again takes a spike. So we've kind of hit a flat line in the Orlando market right now.
Okay.
And it's a slow, but it's steady, and I think there's opportunities for both sellers and buyers if we can make the numbers work and if the numbers are realistic for people overall. I think there's some really good opportunities. And, it comes down to working with your, like we've worked on a number of transactions to make both sides happy.
Yeah.
And there's room out there for everybody to
Yep.
make this work. So,
Mhm.
well, that's our report for this week. Thank you, everyone. Please, again, join us next week for Orlando Real Estate Buzz. Please like, subscribe, and join us every Thursday morning for our updates. Have a wonderful day.
Have a great one, guys.